Hi, this is Drew Tignanelli. This is our April 2024 update. How many times have we done this over
I
the
don't
last
know. It's been,
years?
I'm not sure. We started kind of right when I started. Is
Yeah, well, we
video.
started to do this video concept in 2008, October of 2008. But how long have you and I been doing it? That's what I was
14
curious.
years, 13 or 14 years. I've been here 15-ish years.
Yeah, but you and I used to do it with Tim in the early days, and then I did it with Tom occasionally, but you
Now
and
you're
I
stuck with me.
started to do it about 8 years ago or so, right?
Yeah. Well,
Yeah,
happy spring, Drew.
yeah. It's been like spring down here anyway, other than a few weeks in January.
Yeah.
So, anyway, we're on this April update, and markets are hitting new highs still, and the S&P 500 I think is up 7 or 8% for the year so far,
Yep.
and you know markets just keep rolling along, Mikey.
So last month I went to a convention down in Phoenix, Arizona, Scottsdale, beautiful Camelback Mountain place, and got to meet with a lot of the Schwab executives and Schwab's investment team. And their chief investment analyst, her name is Lizanne Saunders, and she had a great analogy for the market right now. She quoted Michael Caine, and I'm paraphrasing, but Michael Caine once said, when you see a duck swimming in the water, up on the surface, the duck is big and it looks perfectly calm, but down below, its legs are kicking like the dickens. And
Right.
that's how she compares this market in the sense that the larger indices, the S&P 500 and the NASDAQ, they all appear to be doing incredibly well, but there are lots of members of those indexes that are not doing quite as well. There's a thing called a drawdown rate, and drawdown is not something you want. And the NASDAQ has a year-to-date drawdown of only 3%, which seems really, really healthy, but the average member drawdown is 23% as of the end of last month. So that's just
Right.
one little look into how this market's doing.
Yeah, but the word market is a relative term, Mike, because you got the US market, you got the large cap, the small cap, the mid cap, you get the emerging markets, you got the large cap international markets, and so forth. And actually, what you're seeing now is a transition, and this happens every so often, okay? Where the US market has been on a rocket ship for the last 10 years, and if you owned the US market for the last 10 years, you were making money. And if you owned international or any portion of international, you really didn't make much money at all. And this happens all throughout history. And then all of a sudden you get this flip flop. And in the last 12 months, international markets have been starting to do well. They haven't been outperforming the US so far, but they've been performing well. And matter of fact, Japan, for the first time, the Nikkei average in Japan hit an all-time high that was previously hit in 1989. Think about that.
Yeah.
1989, that's 35 years in a market that had not returned to its previous high. And now all of a sudden, it's about 3% higher than its 1989 high. That's a
Yeah.
that's a good indication that international markets are starting to show some strength. And you may look back 10 years from now owning US and wondering what happened, and you didn't own any international, and
Yeah.
miss out on what's happening in the international markets.
Some of the other big news, speaking of Japan, is that what they've done with their interest rates. Classically, they've actually had a negative interest rate, and they finally brought it up to just above zero.
Yes, that they've been a negative interest rate since about 2001. And so this is the first time in 23 years they don't have any negative interest rates, which is fascinating. And it's a sign that things are getting a little stronger. Now, as investors, our job is to always keep our clients properly allocated between international and US and small cap and mid cap, because we don't ever want to make a bet that we know the US market's going to go higher, or we know that the international markets are going to outperform the US. I don't want to
Right.
make that bet. I want to make the bet that if I own this at this proper proportion, and I own this, and I own this, and I own this, I'm going to make a reasonable rate of return consistently over long periods of time. At least that's what historically has happened.
Now, being where we are and thinking about the economy, we'd be remiss not to mention the fact that, we recently had an enormous tragedy in the area. At least 6 people have most likely lost their lives. And that is tragic. So to acknowledge that first. But also there is a lot of questions about how such a significant event as this large loss of infrastructure could affect the economy as well as federal interest rates. We don't really know exactly what's going to happen, but there's a lot of concern over inflation and cost of vehicles, since Baltimore is the largest port for vehicles coming off the line, and also the concern over the fact that the federal government has committed to pay for the replacement of this bridge and the cleanup, and what that may, there's some people are speculating on what the Federal Reserve might respond to that in terms of interest rates, the decreases that we were anticipating seeing, whether or not they'll keep that up with such a large infrastructure spend.
Yeah. You know, I don't, when you look at what happened in Los Angeles during COVID and things of that sort, markets have a way of figuring things out relatively quickly, Mike.
Right.
I do agree with you. Everything you said is spot on, but I'm not too pessimistic about what it's going to do to the economy as a whole, because markets have an amazing way of figuring out how to get around situations like this.
Yep, absolutely.
So
Let's hope so. So
anyway,
it's spring, and we had the concept of spring cleaning. And this exciting spring cleaning we're talking about is not vacuuming behind the refrigerator, but instead looking over your home and auto policies, something that you should, at least take out annually and kind of review. I know we do that with our clients. Drew, what are some of the problems you see with people's insurance?
well, right now, auto and home insurance is one of the key drivers of inflation in the country. Everybody who has an auto policy knows that their premium has escalated at a far more rapid rate than we've seen in quite a while.
Yeah,
And homeowners insurance has done the same. And if you're in places like where I live, you're in Texas or California or Florida, it's absurd what you're having to pay to insure. And there's a lot of people that are just dropping their insurance. But let's go over the key things. Number one, you always need to be properly insured. And I preach this all the time. Insurance agents do not have a vested interest in seeing that you are properly insured. Their interest is actually in conflict for you being properly insured. And that's why probably the number one thing we do with new clients coming to us is realign their auto and home insurance and umbrella and so forth. We want to see something like 500 a million on the auto insurance, 500 a million on the uninsured motorist insurance. We want to see umbrella insurance policies for
yeah.
a million, maybe even 5 million in some people's cases. We
So
want to
let's
see the homeowner's policy at 500,000. We
so
want
let's
to make sure that the client has stacked coverage in certain states and they're going with full tort, not limited tort. And all these things that are, nuances about the policy that most individuals don't really understand the depth of what's going on in there. And they're trusting the agent to give them the right thing, but the agent doesn't necessarily, that's not in their best interest to give you the proper risk management.
So we're not going to be able to cover in detail every aspect about what you should know about insurance. But just to break down a little bit of what Drew just said, when you look at a policy, it's got multiple different numbers on it because there's one coverage level that's for property. And the thing is, a while ago you could cause a two-car accident and 100 grand would cover it. Well, today cars are so much more expensive. If you hit a Suburban and a Tesla, you're at $200,000. So ensuring that the property coverage where it needs to be, and then the liability coverage. One of the things that we also experience a good bit is people not caring about that underinsured, uninsured motorist coverage. And the thing is, that's there to protect you. That's so that if somebody hits you and they're not properly covered, that you'll be compensated. We recently had a client who had done some work with us and we had found that their uninsured motorist was too low. Drew worked with them and advised them to raise that up. They did, and they got an umbrella coverage. And months later, their son was hit by an uninsured motorist with lifetime affecting impact.
Yeah.
And, they might have only gotten $50,000 to compensate him for his lifetime of altered abilities.
Yeah, but instead they got a significant amount of money because they had the proper coverages. And
Yeah.
that's it's critical that you understand this. And the funny thing is, Mike, is that the cost to go from where they were to where they were at the time of the accident was maybe $100, $200 a year at the very most. So we're not talking about a lot of money to align these policies. And and there's a lot of our clients, hopefully there's none, actually I should say, hopefully there are no clients of ours that don't know about an umbrella insurance policy and what the importance of that is. Now, if your net worth is less than $1 million, we might not have recommended it to you. But if your net worth is over $1 million, if you haven't heard about an umbrella, you need to know what an umbrella insurance policy is all about.
Yeah, so an umbrella policy goes over all of your other policies and generally has a fairly small premium to cover a much larger risk.
Yeah. And that uninsured motorist thing, Mike, if you have an accident, you have a 50% probability of having an accident with somebody with relatively little or no insurance. 50%. And I mean, 14% of all drivers on the road are supposedly uninsured. That's what the statistics tell us. And right now, as we're doing this, and somebody's out there listening and watching, and let's say 800 people watch, I bet you anything, 10, 20 of them are sitting there saying, yeah, that happened to me.
Yeah. Let's talk about one more aspect of insurance. So people have heard us talk a lot about insurance they need to add, if they don't have it. But, there's an analogy that I want to use. I recently bought a new office chair from Staples. Thank you, Drew. And when I checked out at the register, they wanted me to buy insurance on my $200 office chair. They wanted $15 to insure my $200 office chair. And I said, no, thank you. If I lose the office chair or it breaks, I'll just buy another one. I don't need to risk $15 to save 200 maybe. And also it's pretty good. I think it's going to be all right. But here's the thing. I give you that analogy. Most of the people listening are probably like, yeah, of course, I'm not paying $20 or $15 for insurance on a chair. People that have deductibles that are very, very low. I've seen $100 deductible. If you get in an accident, you cover the first 100 and then it's on us. Well, you can have options to raise that deductible to 500 or maybe 1,000. And then what you want to do is see how much is that premium, because basically from 100 to 500, that's $400 of risk. How much are you paying annually to protect yourself from that $400 risk? So sometimes increasing your deductibles is a way to manage the overall cost of your insurance so that you can add high risk coverage, umbrella coverage, catastrophe, bad accident, uninsured motorist. You can add all that coverage that would really be something you couldn't replace and just give up $400 in the event it happens.
Yeah, deductibles are another big area that we fix because you really can't make small claims anyway, right?
No, it's not worth it.
It's not. It's too risky too. you have a $500, $600 claim on your automobile, and you make a claim, and then you get another one, and you make another claim. Boom, your premium's gonna take a rocket ship ride, and you don't want that. You could even be canceled. Let's say you make 3 or 4 claims for $400 or $500. Thinking, hey, I've got the coverage, and then my deductible's low enough. You could be canceled.
Yep.
And
And the
so
last
you're not doing it.
and the last tip we really have around insurance and doing a little spring cleaning is when you quote insurance, don't just quote one company, quote multiple companies. And also, anecdotally, we look at a lot of insurance policies, and the ones that have arenas, sports arenas, the ones that have, tons of advertising, if they have a race car, those tend to be higher premium insurance companies, meaning that they're spending a lot on marketing and they're passing that cost on. So checking out some of the companies that don't advertise as much.
And the dumber the commercial, the more expensive the company is. Anyway, yeah, I like, one of our favorites is Erie Insurance in Maryland, but you never see Erie advertised. You rarely ever
Right.
see Erie advertised. And down here, I do the same. I typically find these companies that, aren't in the mainstream, and they tend to be much more effective, and they've got very high ratings for customer satisfaction and things of that sort. So
Yeah.
always look for those kind of companies. Anyway, May 8th, Mike, I will be in
Doubletree,
town.
Doubletree, Pikesville.
Doubletree, Pikesville. That's Reisterstown Road in the Beltway, and we're gonna do. Sean Casey is actually going to be with us that day. Sean is one of the hosts at WCBM Radio, where we do our radio show. He's on the morning show. And we're going to talk about some of our best tax tips and financial planning tips. We're going to talk about the book, The Financial Consulate. We're going to just have a good time, just appreciation, a little refreshments and appetizers, and just love to meet any of our listeners or people who have been watching the Pulse for a long time and would like to meet us in the flesh, as
But
opposed to this two-dimensional image that we have.
but don't
So
just show up, please. We do ask that everyone who wants to come RSVPs. Clients will be getting an email. If by the time this is aired, it probably should have already gone out with the ability to RSVP. You can also call our office or best email info@financialconsulate.com and just let us know who you are and how many people are coming, because we do have limited space.
yeah, it's very limited, and when we're inviting everybody on the radio, so we're doing it on the radio. We're inviting our 1,000 or plus clients. So, if you want to come, we
RSVP as
probably
much
are
as
only going to
possible.
be able to accommodate 75 to 100 at the most. So you got to get that RSVP in as soon as possible, and we'll look forward to meeting you on May 8th. Do you have
Absolutely.
anything else, Michael?
Not a thing.
Not a thing. All right. Well, this is Drew Tignanelli saying God bless.